always look really, really long term. Ecosystem would always tell you, what the hell are you doing for the last 5 years?
What is the secret to this? How to manage founder relationship?
And things wouldn't have really worked out well in many cases. Beginning to get ready,
Yes.
India was a large market.
This is great. I can't tell you what a suitable person you are, Rajesh, for a session like this, because we are talking about a roadmap for India to emerge as a developed nation by 2047 is the loose time frame we are talking about. But emergence as a developed nation also means taking a seat at the global stage.
Yep.
You know, emerging as a global force.
Yep.
And I can't think of a better person than you to talk about it, because Make My Trip, when it started in the year 2000,
Right.
it focused on the international business more than the India business. I think US-India travel was more of your focus.
That is right.
Only around 2005, you
Yes.
put more focus on India per se. And when you decided to do your IPO, you went to NASDAQ, which was in 2010.
Right.
I think even by that time, the term startup was not a household term in India. I
That's
think people like Flipkart, etc., were still trying to find their feet while you were already listing in the United States. So you were like way, way, way ahead in many ways. Can you take us through your vision and your strategy of how did this happen? I mean, most startups would do it reverse, right? I mean, many people are now talking about listing. Some of them got listed. Many are now thinking of going overseas. You did it already.
Right.
How did it happen?
Yeah. No, thank you. Thank you, first of all, for having me. It's a pleasure. You're absolutely right. I think it's about 23 years that we've been now at it. And when we started in 2000, as you rightly pointed out, we were actually, very soon the realization was that we were early. We were really, really early. We were almost like pre-sunrise status of the industry at that point in time, because we were talking about e-commerce business in travel or consumer travel tech business, whichever way you want to put it. But when we looked at the ecosystem, wasn't really ready. You know, today we speak about, we've come sort of miles ahead today in terms of just, even Manish was talking about the ecosystem overall. As far as digital ecosystem for the India is concerned, back then, even the bandwidth was an issue when we started. So we realized that we were early, and then we had to, as typically one of the things that perhaps all the startups should always sort of, as they start their journey, should always keep in mind that there could be a situation alongside your journey where you might have to pivot very quickly. And that was the moment within a couple of months for us in 2000, where we were all set to launch in India. It was an online travel company model. It had happened in all the developed world, but India wasn't really ready at that point in time. India wasn't ready from an internet ecosystem standpoint. Talk about any aspect of digital ecosystem, including the payment gateway systems, etc. We used to have just one payment gateway. Today we are talking about UPI, which is like, we are the world leader in terms of innovation on the payments and the fintech that's happening in the country today. So that is when this whole pivot that happened from shifting the focus from India business to US-India corridor. Now US-India corridor because the customers were going to be in US, and they were Indian diaspora, non-resident Indians who used to travel quite a bit back and forth. And we thought we might be able to just get going, maybe stabilize some of our operations by just focusing on that and trying to bring them or, sort of solve for their travel solution between the two countries. That's how we started. We were very, very small. If you look at some of the funding size, ticket size of the startups today, back then it used to be tiny,
Yes.
like literally. I mean, we had a commitment from a VC which was only about $2 million, and we only got 1 million, and we didn't actually got.
Which year was this?
This was in 2001.
In 2000.
2001.
Okay.
And it was $2 million, VC called eVentures. And there are many things that happened during that time. We got 1 million. We were supposed to get another million. We didn't get because they actually shut their shop because they also realized even the VC ecosystem was pretty early, back then. So, short of stealing money, as we always say, looking back, I think we would have done everything possible to survive for 5 years. And this US international corridor business sort of came handy. But the real journey, as again you rightly pointed out, started in September 2005 to be precise. We relaunched in India. India had started, two things had happened actually. The digital ecosystem had started to just about improve, but Sky had started opening up with low-cost carriers as well. So IRCTC also happened at that point in time, which was also online rail ticketing. I mean, they were not distributing, and they were not distributing for the longest time. Just very recently, a very few years ago, they started selling through OTAs and stuff. But at least the online ecosystem started to sort of move, and the Sky started opening up with low-cost carriers. Air Deccan was the first one. I don't know if we remember today about Air Deccan or not.
Yes, of course, Captain Gopinath.
Captain Gopinath, so he was a visionary as well.
Yes.
And we remember our first direct connect, to solve for the inventory that Air Deccan was selling, to bring it digitally on our platform, was by MakeMyTrip, which was the first direct connecting directly with their sort of inventory system, and then distributing to the consumers on MakeMyTrip platform.
Yes.
And that's how the journey started. And then so it took off from there. Literally took off from there. And then fast forward 2010 to your other part of the question, right? We thought in our collective wisdom at that point in time, as part of the founding team and senior management team, that we were already ready. We were at, by the way, $40 million revenue. 1 year forward, we were looking at about $60 million revenue, which is decent size for you to be able to think if you want to just go public and raise more money, or provide an exit option for the existing investors. Because the investors, for us, September 2005 is when we had raised our second round of money, technically, although practically it was the first round of money, about $10 million. Even that was just about $10 million. And in 4 years time frame, we were already at $40 million top line, and profitable, by the way, back then.
Yes.
We talk about, a lot of the debate these days is about profitability versus this, that, and the other.
Yes.
And we were sort of profitable already, and on the back of air business that we had. And India, while the internet ecosystem had started to sort of open up a little bit, but in internet, the stock exchange system, or the analyst community, or the investors community, that particular ecosystem had not necessarily opened up or was ready for internet-led businesses. Back in those days, it was InfoEdge.
Yes.
Which was the only listed company.
Yes. You were the second one.
We were the second pioneer in our sort of space, but we were the second internet company at that point in time. InfoEdge was, and I would say actually B2C was the first, because InfoEdge was more B2B company.
Yes.
Their supply side, like, the candidates were B2C model. The supply was all coming from consumers or the candidates who were looking for jobs. But their business model was really B2B model. Our business model was completely consumer. And consumer, direct to consumer, or business to consumer business model, we were probably the first one. And there were others, small, and some of them survived, some of them actually did not really survive.
Right.
So that is when we thought about US, because US was an evolved system. US had already many internet companies that were listed. So we didn't have to sell the model per se. We didn't have to go extra mile to just convince. India was also beginning to get ready. India was a large market, so India was a big opportunity.
And it was NASDAQ, anyway known for tech stocks.
Yeah, exactly. So so it was NASDAQ because they were very focused on technology stocks, and the SEBI equivalent there, the Security Exchange Commission, was
Yes.
also, by the way, very, very evolved, like super professional.
Yes.
You know, a lot of people had warned us, by the way, at that point in time, that there's going to be a massive overhead of compliance and integrity, and that was one thing that we were not worried about,
Right.
because we were all professional bunch of people, and you know, as a private company, also we had put some corporate governance sort of framework in place that we didn't have to think too much about, you know, how do we sort of take or make the transition from a private company to a public company.
Yes.
Now, hindsight, if you ask me this question today or, you know, 10 years later, did we go IPO early? Maybe, maybe. But, you know, because of the fact that India was, you know, still a long, long way to go in terms of just the headroom of opportunity. And the more you go public, or, you know, when you go public, you obviously think through and look for the right reasons for you to go to public.
Right.
But the level of scrutiny obviously goes up. And you know, if the market dynamics change subsequently, then you wonder, you know, did I really need that kind of scrutiny there at all? But you know,
Absolutely.
so that was just one aspect, I guess, that you know, we sometimes think about it, that maybe we could have just stayed private for some more time, and hindsight, maybe we could have gone, you know, public later. But all in
Maybe,
all, it has worked out quite
maybe
well.
with a larger issue size.
Yeah, the issue size was
Who knows?
small, by the way.
Yes.
The issue size was very, very small because
How much was it?
it was about $89 million, if you
89 million. Okay.
if you will, right? So it was very pretty small, but blockbuster one. We had like single day pop of about 89%. And
wow.
again, I used to wonder and saying, what did we do to deserve this in one day, right? You know,
Okay.
I think it was just market euphoria, and you know, people were looking at India. The first time India internet company is coming to
Yes.
US, and it was a big space. India was a big opportunity. India was always seen as a very big opportunity, and so on. So we got the benefit of that. But all in all, no regret at all. You know,
Of
we've
course.
been
Of course.
sort of carried on from there on.
Yes. And now we are in a situation where in this particular week, which is sandwiched between Holi and Good Friday, I think many people are using your services, which is why you see some empty seats in the auditorium.
That's true, and I'm happy for that.
Yeah.
You know, even if there are seats, there are less number of people listening to us, but as long
Yes.
as they're traveling, I'm very happy.
Yes. And interesting that you mention InfoEdge because I think Mr. Bhikchandani is in the next session.
Oh, really?
Yeah,
Yeah.
yeah.
So he was on our board, by the way.
Yes, yes.
Just before we went public, he stepped down, but he continued as an advisory board as well, because his board was not necessarily keen on him going on board on a US listed company.
Right.
But he was on our, you know, he's a gem of a person, very, very learned, very experienced.
Yes.
And we've learned a lot from him.
Yes. So you have had, you know, in the life of a company, 24 years is not a long time.
Yeah.
But for a startup, for a company like yours, 24 years is huge, especially given the kind of journey you have had, the ups and downs along the way. So you started probably in the middle of what was called the dot-com bust,
Yep.
right? Then came an economic slowdown in India in 2001-02, which was the manufacturing slowdown, but still economy went down. Then came the global financial crisis.
Absolutely.
Right? COVID. Okay. Now, you have braved all these. And today, as people are talking about a so-called funding winter, plaguing startups, etc., all kinds of talk is going around. For someone who has braved so many things, how do you look at the current startup scenario? And what would be your advice to someone looking to raise funds now or scale up now in today's
Sure. No,
environment?
I think it's a great question. So, the first part of your question is so right. It's actually absolutely spot on. So it's 24 years is, if you really see, it depends on which lens that you use.
Yes.
But if you really see in, you know, 24 years in a life cycle of the business, is not necessarily from one lens that you would see it's a very long time.
Yes.
But nevertheless, as you know, as a young startup, it seems like over 2 decades, it's a really long time, etc. But I think there is one learning in this itself. Yes. And that is that, you know, and for all the young entrepreneurs, right? So, you know, whoever is sort of looking at starting the business, You can't think 3 years, 5 years, you can't think 10 years, you can't think 20 years. You have to have a really, really long-term view.
Yes.
Just as a mindset, you have to have a very, very long-term view because it's invariably a long-haul business. You just heard Manish saying that Amazon is 26 years young, and they're already sort of global. They are in India for the last 10 years, but just 1% penetration in the market. Imagine the size of the opportunity that is there, especially in the emerging world. The size of the opportunity is really large. So the first sort of suggestion is that always look really, really long term. The 3-year, 5-year, 7-year, 10-year view is from the investor lens. That might be the right view from their point of view because they have fund compulsions, they look for exit period, they have to exit because, fund might be shutting down, etc. Or they have to just give returns to the investors as they would have promised in the 5 years or 10 years time. But not for the entrepreneur, not for the founding team or the management team. They have to look at business for a really long term. Right. So now coming to the second part of your question about funding and what is that they should do in so-called funding winter today. While it's a very popular coin term today, but if you ask me, the amount of liquidity that we have in system, there is no dearth of capital for the right people. There is absolutely no dearth of capital for the right set of team and the right set of business at a right stage. The difference that has happened, which is, by the way, a very good thing that has happened to the ecosystem, it was long overdue because a lot of that funding or the money was coming easy to a lot of people and with less questions asked, right? So when, and people were just going berserk, and this was more the investor community in terms of just looking at India as a really large opportunity, which truly it is, but at the same time, just going maybe, little bit more casually, a little bit less seriously in doing their own set of due diligence before they could write some big, massive checks, right? There was a race. It has started to become like a founders market as people started talking about it. I don't think it was great. I don't think it did a world of good to the founders, to be honest. Right. The mindset, you were getting easy money and then you were just actually deploying some of that easy money into the wrong areas as well.
Yes.
And this correction therefore had to happen, because it couldn't have continued for a long time.
Correct.
And it happened. So today the only difference in the funding market is that there are more questions being asked and there are right questions being asked. There is the level of due diligence has gone up. And therefore, if you pass all of that test, and if you're a serious founder, you're thinking about long term, you have a vision, you have a problem that you're solving, your product is solid, you have done a proof of concept, there is no way that you will not get money.
Yes.
When you meet up with people, in fact, I hear from them and saying, I'm not getting real high quality companies anymore sometimes. Now, so that tells you that they're actually looking for more and more. So and the amount of capital, there is plenty of capital today. So I don't agree with this that there is shortage of money today in the market, especially in India. You have a great idea, even at the idea stage. And by the way, Suveen, as you would have also realized, the other ecosystem which is fast developing and has done wonders already is the angel network.
Yes.
The angel investment network. There are so many people because there are exits happening and people are making money and all, and that money is going back into the system, right? The founders who would have had, very good exits, and that money, that pool of money is actually coming back into the system. The pool of money is not necessarily going into, I'm sure they'll be going into different class of assets, but a lot of money is actually coming back into fueling this ecosystem.
Yes.
So I think there are many, many avenues today, to be honest. But like I said, the only thing that has changed is that you have to be very, very, very well prepared now.
Absolutely. So many founders who have been successful now have become angels for other startups. So it's a virtuous cycle, I suppose.
Absolutely, which is a great thing. And when it comes from, let's say, founders who've been operators, who have run the businesses successfully, had a good exit, it is even better. Because let's say if you end up taking angel money from them, you also get guidance in the process, right? You know, a lot of the people,
Yes.
because it's, you know, like I said, that we used to learn a lot from Sanjeev.
Yes.
You know, we always used to have somebody on board that we can actually brainstorm, we can use him as a sounding board for our strategies. You need someone, because when you are young, you are just going through your own strategies. You have to have people around you, and, you know, maybe better than you,
Yes.
for you to be able to actually get a lot of mentorship and guidance. So I think that is an added advantage in that ecosystem that you get.
Right. And you are absolutely right about there being no dearth of capital.
Yeah.
In fact, my colleagues have written detailed stories about what is called the dry powder. Right, that so many VCs are sitting on enormous amounts of dry powder, which is good news and bad news. The fact that dry powder is getting accumulated means fewer and fewer avenues to invest. So as you said, the right questions are being asked. But according to you, what will be the right answers to those questions? You know, if earlier you said the right business at the right stage by the right founder, what will be that ideal mix if you were to say, if you were a VC right now, or with you know 400 million to invest, what kind of companies, founders, business linked to market would you be looking at?
Yeah. No, I think it's a great question as well. So, you know, if you really think about it, I mean, at a very fundamental level. So let's say if I have to, you know, start all over again and, you know, think of an idea, and depending upon the area that you want to pick it up, and there will be all the areas, like pick up, you know, even the agri-tech or, you know, technology, you pick up any space, the electrical vehicles, there is the renewable energy, you pick up any space, there are opportunities across the board. So you obviously will pick up the space, but more importantly, what you need to focus on is that what is this idea going to do from an impact standpoint?
Yes.
Right? What problem is it going to solve for?
Absolutely.
You know, if I you know, take our, you know, our mind back to, let's say, our own business, you know, the first 5 years, you know, and we were all professionals and we were not straight from the college. You know, there was an opportunity cost attached to it, right? You know, and all your social ecosystem would always tell you, what the hell are you doing for the last 5 years? You know, there's so much of lost opportunity. The one thing that sort of kept us going was the self-belief in the idea and the problem that we were trying to solve for,
Right.
in the model that you had. So if you you know, you've been able to sort of test it out with, let's say, small money, you know, some sort of a proof of concept in the market, and or for that matter, let's say if you have international benchmarks where, you know, that particular idea has fructified into a successful business, right? So you get confidence from there. You know, and every market has its own specific nuances as well. So you customize on top of it. You solve for the local market, the local conditions, etc. You get more and more confidence. So more and more, that idea which translates into a product or a solution, whether it is a B2B business or a services business or a, you know, direct to consumer business, you will be in a better position for you to be able to have a lot of confidence in you, for you to be able to go and pitch, right? And then get the right kind of sort of response. That is right. But, you know, if let's say if the idea is 30,000 feet level and you've not really done a detailed work on it, you haven't really, you know, tested the water in the market also a little bit, then the conviction is going to be a lot lesser. And that is where I think you're going to struggle. So more and more focus on product and customer, or what kind of pain that I'm trying to solve for. Bigger the pain, by the way, sooner you will get the money, because
Yes.
the solution have to. And then of course this, you know, the other, you know, sort of standard stuff like the size of the market, the size of the opportunity, what is the competitive scenario, etc., are all, you know, standard stuff that you will learn in the B school.
Yes.
But I think at the core of it is, you know, what kind of a problem that I'm solving for, and my product and solution is a good market fit or not.
Right. I think Mr. Bhikchandani has joined us in the audience. We were just talking about you. Rajesh was talking about his early journey and how much he looked up to you.
You would have felt embarrassed, Sanjeev. So if I rewind that, you would have felt embarrassed. I was talking about you being on our board.
Yes. So interesting. Again, talking about solving a problem. I think that is one thing that probably put you in good stead through this 24-year journey, because you were out to solve a real problem. You know, there was time when we were all slaves to travel agents, you know, for the simplest of tasks. And you came out and you said, I'm going to solve this problem. And you stuck to that task. Like they say, nose to the wheel or nose to the grindstone. I forget the right phrase. But you stayed on course. But now, if you look at a lot of startups, do you think the founders have the right focus, that sharpness that I'm here to solve a real problem? I will just touch upon a subject that is a matter of discussion, say quick commerce, right? In 2023, the first unicorn that was produced by India, after the glut of 2022, there was a drought. But the first one was a quick commerce company, which became a unicorn. So clearly, among investors and among consumers, there is a belief that quick commerce serves a purpose. On the other hand, some people say that, are you solving a real problem if you are delivering a package in 15 minutes instead of 30 minutes? Are you solving a real problem? Where do you stand on the approach today's founders have in identifying and solving a real problem?
No, I think it's a good question, Suveen. So, firstly, I would say, you know, at an Uber level,
yes,
make no mistake about it, the quality of founders that are around us right now in the ecosystem are phenomenal. And I would say that bunch of people, you know, I don't think we should just paint everyone with the same brush, but there are a bunch of founders who are high quality founders and have built phenomenal business, focusing on solving the business problems. You know, Flipkart is actually a good example of that. I was on Flipkart board as well. So
yes,
you know, not anymore, but, you know, for the longest time, but early stage as Flipkart was sort of evolving, both Sachin and Binny were amazing founders. And there are many others, like, you know, Zomato has built a great business, you know, Policy Bazaar has built a great business.
yes.
Yeah, Delivery has built a great business. So you know, there are many, and there are actually, we should be very, very proud of you know, our system and our country, that today the quality of founders are really, really good. And even some of the younger companies, you know, unicorns or whatever you want to call them, and I believe less in some of those terms, to be honest. But eventually they would end up building a very long-term sustainable businesses. Now, specific to quick commerce, I would
Yes.
say, you know, at the same time, you know, having said that, there will be people who would get carried away. I was making that point earlier, that there was euphoria, there was easy money available, you know, and some of the founders would also you know, get carried away and, you know, maybe end up deploying money in the wrong areas and so on and so forth. That also has happened.
Yes.
And luckily that correction has taken place, and now there is, you know, there is far more sort of sanity in the market. But specific to quick commerce, I'll tell you very interestingly, you know, I was very skeptical about it, exactly the way you said. You know, is it really solving a real problem or not? You know, till I realized the other day that, you know, my wife is getting used to it. So clearly there is some customer segment who's seeing some benefit out of it.
Yes.
The outstanding question in my mind, even, you know, interestingly, there was an investor, old investor of ours in office, and we were talking, this was the discussion topic generally, you know, since he's an old investor, so we will first talk about the ecosystem before we talk about MakeMyTrip's stuff. And we were talking about it. And, you know, and to be very honest, my outstanding, I mean, in my mind, and I don't claim to know that business really deep, you know, that will be the caveat, but just on the face of it, I can see that the interest is picking up and some of the customers are seeing the value. Maybe in certain segments, let's say grocery is one of them. You know, you've forgotten about something you're not necessarily planning, you're getting used to it. 5 minutes, you know, somebody is there at the doorstep and delivering. What I'm not fully sort of clear about today is whether economically this is going to work and scale at you know, for everyone, for every category in every segment as well. So it could be a pretty interesting niche for certain categories in certain segments, in certain markets, certain catchment areas, where, you know, there is value, you know, but will it really scale? But I would love to be proved wrong, because there are people who are sort of focusing on solving some of these problems. The good news, however, is that if there was early on, there was ton of capital available on Vanity Matrix.
Yes.
You know, you will negative unit economics and you will get to the top line. I don't think that's going to be available, you know, anymore, you know, as easily as it used to be, which will sort of strike the balance in itself in any case.
Yes. So there's a lot of talk these days about profitability or path to profitability, unit economics. Is that the right approach? Because Amazon, for the longest time, did not make a profit.
Yeah.
And look where it is now. So how do you balance that you know, fire of growth versus profitability? Because, well, there are investors who also have to be dealt with, and there is the founder ambition, aspiration. How do you balance the two?
You know what? It's a very interesting debate. I mean, you know, this is the topic where I think it gets discussed pretty much every forum. You know, every sort of player in the ecosystem and so on. Mm-hmm. The way I see it, to be honest, is it's not necessarily it needs to be seen as a trade-off.
Yes.
You know, a lot of the people would end up saying that, you know, because I'm focusing on profitability, therefore I will not look for growth. I don't think that's the right way of looking at it, or vice versa for that matter. I think the right way of looking at it is, you know, and minus the free easy capital that was coming, so I will ignore that part for a minute. But fundamentally, the way we need to see this is that what stage of life cycle the business is. Because let's say if you're a startup, you know, and you are building your business. Now, of course, we all know the basics of the business is that the business cannot be profitable from the day one, right? You'll have to
Yes.
invest in the areas, you will have to, you know, whether it's a supply chain or technology or the product side, or, you know, you will have to invest, right? So there will always be a gestation period. Now, if somebody is, you know, force-fitting the profitability in that phase is stupid, right? I mean, can't be short of stupid,
Absolutely.
right?
Yes.
So that's the wrong thing to do. But if you have reached a certain level of maturity, your product is maturing, you have a certain set of critical mass of customers, your repeat has started kicking in, and there is no way that you would not make money, right? So
Yes.
now you can make the choice that, you know, I have only X percentage market share today and I want to gain to Y percentage market share and I want to take an aggressive path to that. That is a strategy. That is a strategic choice that you end up making.
Yes.
Now that strategic choice will also be accepted by the investors or whoever you want to. First, you have to convince yourself whether it's the right thing to do or not. And, you know, and we at MakeMyTrip would never, you know, in the normal circumstances want to do it that way. That we will just do at any cost, you know, we will sell below cost and we will get to a particular market share.
Right.
Because we don't believe that is a very fundamental way of building business, long-term sustainable business. But we've seen market dynamics where a lot of people will get into it and get carried away with the market opportunity and end up using the capital that they get, aggressively trying to acquire customers, or I would actually say acquire transactions more than customers. Yes. Because they also realize after that the customers are much more smarter than you know, at times, like probably in every market in the world, where the moment you to stop giving all those kind of deals, yes. That froth goes away, like in no time. There's hardly any stickiness. The stickiness and the loyalty will come with your experience, your product, your relentless focus on innovation. You continuously keep improving the service, you know, improving the product portfolios and so on. So depending upon which stage of life cycle that you are, you should be making money. Yes. That you should, it automatically you should be making money, right?
Yes, yes.
You know, we were talking about our IPO in 2010. We were profitable in 2010 on back of our air business back then, right? And we were consistently 3 years profitable. Then we started investing behind building the hotel business.
Right.
And there were many hurdles, and we had market dynamics in between where I had to willy-nilly get into sort of defending our leadership position by, you know, I think spending/wasting some of those dollars.
Yes.
If the market dynamics were not there, you know, differently, we wouldn't have been spending that kind of money. We would have been investing that money. You invest money in opening up the market,
Yes.
but in the right areas, at the right places, but not necessarily just go completely berserk on couponing or deep discounting and stuff like that, right? So I think the way to look at this whole discussion is to very fundamentally look at which stage, what is your goal, what kind of market share that you want to get to, what kind of investment it is needed.
Yes.
And then deploy your investments accordingly. Now, if that means that you may not be for that particular unit profitable because you are in an investment phase, that needs to be explained very clearly.
Yes.
Right? And and there will always be, and you've taken Amazon's example, the reality, by the way, it's not that, at an Uber level, you will see Amazon was not making money, but Amazon was finding out the other areas of businesses where they were monetizing it beautifully.
Yes. Yes.
And making ton of money.
Correct.
Right? So,
Yes.
so holistically, Amazon was
Yes.
always making money.
Yes. That's how they have AWS now.
AWS came in from there, right? So you were always, as a businessman, as a founder, when you're very focused on building long-term sustainable businesses, you would look towards that.
True.
You can't perennially keep raising money all the time. You will
Yes.
run out of your equity only, right?
Absolutely. Switching tracks slightly here, Rajesh. A lot of startups flounder because founders do not get along. Okay, we have many, many, many examples. On the other hand, we have your example. How well you have gelled with Mr. Deep Kalra. You were CFO and he was CEO, and the company did great. And then he stepped away and you became the group CEO and the company goes on. What is the secret to this? How to manage founder relationship?
Well, besides this, Sanjeev is another example.
Yes, of course.
Sanjeev and Hitesh have
Yes.
done wonderfully. We've learned from them. They're the inspiration. And a lot of the credit actually should go to, gentleman sitting here and gentleman who's not here.
Okay.
Deep. A lot of the credit. No, I really, really mean it, because they set the tone from the top, right?
How?
And I'll tell you some of the traits that having worked so closely now. I think 2 or 3 very important things. One, they are inherently super secure, and 2, they love to at the right time let go, right? So they're not over possessive about anything, and they always believe. I remember Deep always used to say that one of his slides, by the way, early days when he used to sort of be let's say a mentoring presentation for young entrepreneurs, always try to look for talent. As evolve, as you scale up your businesses, you should hire talent better than yourself. You should aim to hire talent better than yourself all the time.
Yes.
Now, only an incredibly secure and competent person could think, and a matured leader could think like that. Now, the moment you have that kind of thinking, and it's not about just let's say founder or co-founder working together. Now, you would think founder and co-founder. Yes, there are examples in the market that there would be friction and things wouldn't have really worked out well in many cases. But you would believe that if there are partners, then they would probably be able to resolve some of those things better than maybe if you end up doing it with the executives sometimes, right? So, but here in our case, it's not about let's say Deep or I, it's also about 12 other senior management.
Very much.
As part of the leadership, and they're very, very stable and very tenured, right? So this philosophy has sort of, more also been percolated down to build the next layer and the layer next to that, in terms of just making sure that the business is not deprived of the high quality talent, right? And fundamentally for that, you have to have empowering sort of, you of course have to your own self be inherently very, very secure. And you have to fundamentally believe that, as you're scaling up the business, you will have to have the empowering culture where you will bring in the right kind of people, give them the right kind of empowerment and flexibility and freedom. And that is how you scale the business. Because if you are, let's say, very, very possessive, you think that everything has to go from my desk gone are the days. That's a very conventional way of sometimes running the business. And you will never be able to scale up nicely. I mean, you might be able to hold on to the power, so-called power and control, but I'm not sure that'll sort of help build the scalable business. So, there will be examples who would be, sort of super normal people. Maybe they would have been alone be able to pull it off.
Right.
But I don't really see any business that gets pulled off.
Okay.
By single person.
Yes. Just to understand it a little bit more, what is it that made you guys secure, and why is it that some other people become insecure?
Yeah. Wow, that's a good question. Maybe a little tough one. I've never thought about that. I think that's why I kept using inherently.
Yes.
Secured. I think it got to do with at some level that you feel that you're capable, competent enough for you to be able to not necessarily, or I would say, maybe the personality trait is that you're not necessarily a control freak, right? And therefore, you end up sort of, giving the control to the others as well, right? So I think it's to do with maybe at some level the upbringing, maybe at some level, the experience and the, over the years, it adds to the gravitas effectively. I mean, the last person to be able to, and I'm fumbling already, to be able to talk about your own personality traits or whatever, right? So I think it builds over a period of time, and it's a lot to do with over the time, the kind of experience that you've already got as well.
Yes. Rajesh, Geetika's reappearance, there is a signal that we have come to the end of our session.
And there as well. The
and
red
time
light.
there as well. And time flies when you are having fun. I was having fun, not sure about you.
No, I loved it.
It was great talking to you.
Thank you
so much for joining this. And
thank you.
Good luck for the
Thanks a lot. Thank you.
Once again, thank
Over
you
to
so
Geetika.
much. Would you please come forward for a photograph for our publication?